This meeting is being recorded.
Hi guys, thank you for joining today. So today we are doing a joint presentation in collaboration with the St. John Newcomer Center. So we are from RBC. I have Scott with us today. He's going to be the main presenter on the topic. He is a mortgage specialist with RBC, and he's also a newcomer specialist when it comes to mortgage in the St. John region. So this is his email and contact. So if you have any question or you need any help, please feel free to reach out to him. So I'll hand it over to Scott, and you just let me know when you want me to change the slide, Scott, and it should be all good, okay?
For sure. Why don't you just make the slide there full screen, just so we can see it a little bit better. There we go. There we go. You can just jump on to the next slide. But yeah, like Tanvir said, guys, I'm a mortgage specialist here in St. John. You know, Tanvir and I work closely together with, you know, many newcomers coming to Canada for a variety of different reasons, right? I mean, mainly, you know, like I am doing just new mortgages for people arriving to Canada, but the policies and programs, they oftentimes change. So the thing, like, we enjoy coming out to events like this because we can update you guys on, you know, what it takes to get a mortgage pre-approval, what it takes to buy a home, and update you on any new policies or changes that might be going on in your world. I mean, kind of the, oh, what are we looking at here? I'm not sure if that's just me or did the presentation disappear for you guys?
No, I can see it right now, like topics, the slide with topics.
Okay, that's fine. We're good. Sorry about that. Yeah, no, so the main topics that we're going to go over today is a mortgage pre-approval, the updates to the newcomer programs or the foreign buyer bans that you guys may have heard about, and then just the home buying process. And then after that, you know, if there's any questions people would like to get answered, we can certainly go over those as well. You know, I'll leave some time for lots of questions because I know that you know, you may have specific ones. And then further than that, you know, if you have a question that is very specific, you don't want to bring it up on this call, we can always book up a meeting or a follow-up to you know, maybe take a look at your pre-approval or just, you know, get some questions answered for you. But you know, at arriving as a newcomer into Canada, I mean, going over the mortgage pre-approval process is very important. We look at a couple different things. I mean, I'll kind of just break down as of today what we're looking at. I mean, when you're a newcomer to Canada and you're on a work permit or a study permit, or you're waiting for your permanent residency. I mean, unfortunately, because of the new Prohibition Act or foreign buyer ban, you will need to wait until you get your permanent residency before you can purchase a house in Canada. But there are steps that you can take to be prepared for when the permanent residency approval comes in. So that kind of brings those first two topics together. Like, I'll talk to you about the pre-approval and then what you can do prior to your PR status to get ready for your pre-approvals. But the pre-approval, like a mortgage pre-approval in Canada, you know, is a great idea to do prior to reaching out to any real estate agents or going to look at properties, simply because it gives you an idea of what your purchasing power is. I mean, you can figure out, okay, how much can I spend on a house? What's my down payment requirement? And what are my monthly payments going to look like based off of a mortgage of this size and in today's interest rates? So that's exactly what we do with a pre-approval. We take a look at, you know, what's your status in Canada? What's your employment situation at the moment? And how much money do you have set aside for a down payment? So as you can see here, I jotted a couple of bullet points down. You know, the minimum down payment requirement to purchase a house under, the newcomer programs, once you have your permanent residency, is 5% down, right? So we want to see that you have a minimum of 5% of the house price in your name for the last 90 days. We want to see that you've been employed for a minimum of 3 months, but you'll also need to be past any probationary periods that your employer may have. So even if you've been working for 3 months, but your probationary period is 6 months, we'll need to see that fulfilled in order to get a pre-approval completed and approved in the system. And then secondly is the 12 months credit history in Canada. So this is an important point. We like to see that you've been in Canada, if you've established some credit history, and that you're starting to kind of build some Canadian credit. A lot of you might say, if I'm a PR and I just landed here, how do you have 12 months credit history right away? And the answer is you don't. If that's your situation, we can kind of work together, whether it's a reference letter from a bank in your previous country, or maybe a credit bureau from your previous country. Like, there are little things that we can do, but typically the banks do like to see that you got some Canadian credit, whether that's, a cell phone bill, a small credit card, any little small lines of credit or anything like that you've gotten when you first arrived in Canada, in order to kind of build that credit history. If you are coming in and you're on a work permit or study permit, it is important to, get into the bank, get your accounts open, get a small credit card, which really comes with our newcomer onboarding process anyways, and just build that credit history a little bit while you're waiting for your permanent residency. Or, if you're in school for a while, use the credit card, pay it off every month, just so you are positively growing your credit history here in Canada. Because when it does come time to get a mortgage pre-approval, you'll already have that 12 months. And you'll be able to fulfill that piece of the pre-approval. The down payment. The down payment is, you can show me that those funds are in your name inside of Canada or outside of Canada, right? So if you're still holding money in your home country, as long as you can show me bank statements in your name for the last 90 days, we can use those funds. I mean, it does need to be your funds under your name. I mean, if it's going to be an application that's joint with one of your spouses, it could be in either of your names. If it's an application solely under your name, we'll need to see the money under your name. It is easiest to kind of move some of those funds to the bank and have them here in Canada, so they're available to you. And then your employment history is, once you're here and working and you're in a job for over 3 months in past probationary periods, I mean, you've kind of established work history in Canada as well. It may not be your forever job or the job that you desire to have long term, but it is important to get a job, stay in that role for a while, to show that you have worked towards gainfully getting employed here in Canada. So those are the high level, the things that we look at when we're doing a pre-approval. Moving on to the what people are calling the foreign buyer ban, or the Prohibition Act, that the government put in place on January 1st, 2023. What they said is, if you're on a work permit or study permit in Canada, they're putting a 2-year ban on buying homes. So they want to see that you graduate from your work permit or study permit to a permanent residency before you're able to buy a home in Canada. And I mean, there are some exceptions. There's exceptions to every rule. Like, for instance, if you are on a permanent residency and your spouse is still on a work permit, then you would be eligible to still buy, right? Like, if the only way to really get around it is, if one of you has a PR, then you can add your spouse to the application and use their income and use the savings in their name if they're still on a work permit. So if it's husband and wife, that's okay. I know that the majority of the time, husband and wives usually get their PRs at the same time. But if you're in a situation where you're here first, and you're getting your permanent residency first, we can take a look at that application. Then the only other real exception to it is if you're on a work permit, but you filed taxes in Canada for the last 3 years, then you would be exempt from this as well. I mean, there are certain industries where people stay on work permits. But there used to be a lot of transactions that happened when, maybe you were on a study permit and then your parents would co-sign for you. That can't happen anymore. The only real co-signing that can happen is with a direct spouse. And then so if you're on a work permit, if you're on this call, you're on a work permit, you're on a study permit, and you're trying to figure out, okay, what do I need to do in order to get ready to buy when the time does come that my permanent residency is approved and in place? It's exactly this. I mean, look under the pre-approval tab there, start to bring some of your money to Canada so it's in your account for over 90 days. Go out there, get employed, find a job that you think you're going to be in long term. So when your PR shows up, you're already past your probationary periods. You're already past your 3-month employment window that we require. And also, get a little credit card or something and start to build some credit within Canada. There's a lot of things that you can do on a work permit to benefit you down the road when your permanent residency is approved. Now, if you already have a PR and you're here, then maybe there's one of these things that you need to focus on, right? Whether it's the down payment, the employment history, or the credit history. That being said, like once all of this is in place, how these pre-approvals work is I will verify your income and make sure that you're able to figure out what your purchasing power is. And what it does is it actually locks interest rates into our system for 120 days. So if you're able to purchase, find a home and fund the mortgage within the first 120 days, then those rates will be guaranteed to you. If you go past the 120-day rate hold period, then we just take a look at renewing your pre-approval and locking you in some new rates. Really, the main purpose of the pre-approval is to figure out, okay, how much can I spend on a house? I'll provide you with a pre-approval letter that you can show to your real estate agent, because most real estate agents in this market, they'll make you go get a pre-approval before you go out and start looking at houses, just because things are so competitive right now and they want to make sure that their clients are properly vetted beforehand. So when you come to the bank and you come to RBC, you come to myself, and I can get you a pre-approval and give you a pre-approval letter, then real estate agents and people are going to start taking you more seriously when you're out offering on houses, because they know that you've properly been vetted and that you are ready to buy. So the pre-approval has a lot of value. It helps you figure out, okay, where am I at in the process of buying a house? How much can I afford? And am I ready to go out there and start looking? And throughout the pre-approval process, I'll be able to break down and let you know, okay, this is what you can expect for a monthly payment. There's obviously, there's different payment frequencies that we can set you up on, whether that's monthly, bi-weekly, an accelerated bi-weekly payment, whatever fits into your, pay cycles and how you like to manage your bills. You'll have an idea of how much that payment will be. And then we'll also go over other costs. When you purchase a home, some other costs that you'll be responsible for will be like property taxes and utility bills and home insurance. So those are other items that we can go over, and I can give you a budget, what you can expect on a monthly basis, for certain size mortgages, or if you spend X amount of money on a house. And then after the pre-approval is completed, and you guys, you have a lot more information, and okay, this is what I should be looking for. The home buying process from there is really connecting with a real estate agent, which I can help you with if you don't know realtors in the area. I partner with lots of realtors. You can give them your criteria, say, I'm looking for houses in this range, in this area of the city.
Kailangan PR ka. PR, need to have PR status talaga. Nag-work ka.
Can anyone else hear that, or is that just me?
Yes, I heard that.
Okay, I think somebody's not on mute there, but anyways, I'll just keep going. The home buying process. So once you have your pre-approval in place, you can go to a real estate agent. You can say, I'm pre-approved for a $300,000 purchase. I want to take a look at houses in this area of the city. and they can actually set you up on like a mailing list. So anytime a house comes on the market, it'll come directly to your email. You can take a look at the photos and see if it's something that you like. If you want to go see it, you let them know and they'll take you out and view the property. You could also, just go onto realtor.ca and manage, look at the properties yourself and see, okay, how much can I get based off of this, this purchase price, and do some things from there. So that's kind of high level, the whole process. I know that there's, a lot of different, you guys are all obviously all in different situations, whether you're, you have a certain amount of time, whether you have a certain amount of time left before you get your PRs. But I think we could probably open it up for some questions and just see if people want to, raise their hand, ask a question, and I can answer them. I mean, I think, if you have a question on your mind, likely lots of people do, and it might be the same question. So it might be a best way to get things going. Are we able to let people unmute and ask questions?
Yeah, I actually have a question. Can I go ahead?
Sure, go ahead.
Okay, thank you very much, Scott, for your presentation. So I actually have two major questions. The first question I would like to ask is on the pre-approval. One of the situations that I have noticed is that, just like your presentation says, it lasts for a period of 4 months. So the first question I want to ask is, when is the best time to request for a pre-approval? Is it when you're close to buying the house? So that's the first question. Then the second question is on your credit history. In a case where you are married, does your spouse's credit score count as well as your own credit score? So for instance, I have my credit history, my spouse has her own credit history. Are they going to consider the two, or is it just going to be one person's credit history? And does that also apply for the employment history as well in terms of your bank statement?
Yeah, thanks for that. Those are great questions. As far as the pre-approval goes, just to answer the first part of your question first, if you are taking a look at the different criteria that I've laid out there, and you know that you've met a lot of them, you're on your PR, you have a 5% down payment, you're past your probationary period at work, you have a credit history in Canada, and you think you're ready to get out there and buy, really the best time to do a pre-approval is when you're getting serious about looking at a house. It does require us doing a credit check because we need to see where your credit history is at. So I mean, I would say, the best time to get a pre-approval would be when you're really getting serious about how much can I afford to spend on a house. Because then your rate hold period in the 120 days is going to have a lot more impact for you, right? Okay, if I buy a house in the next 4 months, I'm going to be looking at a mortgage payment of this amount based off of these rates. So when you're ready to buy and you think, okay, I'm tired of renting, or I've met the criteria and I want to take a jump to the next step and look at buying, that's when I would reach out and take a look at doing a pre-approval. If you want to give me a call or send me an email to set up like a preliminary meeting and just say, hey, here's my situation, when do you think we should apply for this? Then on a case-by-case basis, I can help you out with that, because I can still confidently take a look at your income, what you have for debt, and without pulling your credit, give you a pretty good idea how much you can spend on a house. So I hope that answers the first part of your question. The second part of the question is around credit scores and employment income and things for spouses. So when I'm doing a pre-approval, we're going to do it based off of either just you or you and your spouse. So if you come to me and say, I want to get a pre-approval solely done in my name, then I would do a pre-approval for you based off of your income, your down payment savings, and your credit score. If you wanted to do a joint application where you and your spouse were on it, then we would add you both to the application and we would do a pre-approval based off of both of your incomes, both of your savings, both of your credit scores. Everybody has individual credit scores in Canada. So if you're looking at doing a pre-approval, but all the credit is held under your name and not your spouse's name, then you should be doing the pre-approval under your name because you're the one who has the credit history in Canada. You can get joint credit cards and have some joint debts, but if you have a spouse who holds debt but has no income to offset that debt, maybe you want to think about doing the pre-approval in just your name, because if you're bringing debt to the application with no income, then you're going to be eating into your buying power when it comes to purchasing a home. But the simple answer to your question is, if you're doing a sole application, it's going to be based solely off of your credit history, income, and down payment savings. If you're doing a joint application with your spouse, we'll be taking a look at both of them.
Awesome. Thank you.
No problem.
Yeah, there is a question in the chat. Can we get pre-approval before getting PR?
Well, technically, I couldn't issue you a pre-approval letter like I was talking about earlier. Like I couldn't confidently give you a letter and say, here you are, you're ready to go out and buy. But if you're getting very close to your PR approval and you've submitted your paperwork and you're just waiting on the documentation, I can figure out what your purchasing power is. And then whenever your PR comes in, I can update the application and quickly get an approval in place for you. So like, if you're getting to the point where you're really close to getting your permanent residency, yes, we could certainly connect and take a look at doing a pre-approval. And if you're 12 months, 18 months out, it might just be a little bit too soon. I don't know if that answers the question, but okay, yeah, you can see. Just said thanks.
Kuram, please.
Next question I see there in the chat. I'm just going to go through some of the chat questions here. Actually, no, sorry. There's somebody with a hand up.
Yeah, there is a Kuram, and afterwards you can go through the chat. Who was first?
Yeah.
Yeah. Kuram, go ahead. We can't hear you, Kuram. Okay, let's go through the chat.
Yeah, Karan, why don't you just type your message into the chat there? That might be easier and we can go through that. So just looking at the next question, Scott, how does part-time job work or working as a contractor influence the chances of an approval? So great question. When I'm verifying your income, because likely your income is going to be like, you're not going to have a full tax year under your belt. What I'm going to be requesting from your employers is a job letter. And on that job letter, we're going to be looking at, like, they're going to state, what are your guaranteed hours? What's your biweekly, what are your biweekly hours that you're working? Or they might state what your annual salary is, that you're past your probationary period. When it shows, like when you're part-time, the only time that I can actually use your part-time income is if, let's say you're working at the SJNC, for example, and you're a PSW there, and you go to them, you say, I'm looking for a mortgage pre-approval, I need a job letter. If you're working part-time hours, let's say you're working 37.5 hours bi-weekly, I'm going to need to see on that job letter that you're guaranteed 37.5 hours bi-weekly in order to qualify that income. Because if you're, picking up shifts, or you're a shift worker, you work overtime, you get night premiums, things like that. If that's not guaranteed, even if your base salary isn't guaranteed, the bank can't confidently use that income because we don't know that it's going to be there long-term for you to service the mortgage. So you got to have guaranteed income, even if it's part-time income. So that part-time income and contractor, like the other part of your question is contractor income. So if you are providing me a contract and it has a specific end date on it, like let's say, you're on a contract, a 6-month contract, and it ends on March 1st. Well, that's showing us that your income is ending on March 1st, and we don't know what it's going to be going forward. So contractor work is definitely, I can't use contractor work. And part-time income, you need to have guaranteed part-time income, and then I can take a look at using it. So I hope that answers your question. Going down to the next one, can we show funds which are held in NASDAQ stocks? Absolutely. I mean, if you have a brokerage account, most of them are issuing quarterly statements. So really what I need to see for people's down payments are, I need to see that it's in your name for 90 days. 90 days is 3 months. So you could issue me a quarterly statement from your brokerage account, as well as an up-to-date screenshot, as long as it includes the balance and your name for verification purposes, then I can qualify it as a down payment. Next one, I came in a little late. What's the minimum to have in your account to apply for a pre-approval? Secondly, a credit score of 700 or close, is that advisable? I'm glad you brought the credit score thing up. So minimum credit score for a mortgage pre-approval is 600. And you guys will find, if you're new to Canada and you're building your credit, for the first year or two, your credit score is probably going to range between 600 and 700 because you don't have that many trades on your credit bureau yet. And you have to actually build up your trades and build your credit while you're here in Canada. The longer you're here, the more trades that you have on there. Maybe you start to service a mortgage and you're paying everything on time monthly. You'll see that score climb and climb and climb. It ranges from 600 to 900. But if you have a credit score of 700, that's a great credit score, especially for a newcomer. And the minimum to have in your account to apply for a pre-approval is 5% down on whatever the home value is. So if you're buying a $200,000 house, we're going to need to see that you have $10,000 to your name for the last 90 days. One other number that you guys should keep in mind, and above and beyond the 5% down payment, when you're actually closing on a home, we want to see that you have like 5% as your minimum down payment, and then 1.5% for your closing costs. So your closing costs are, you got to pay your lawyer to actually register the mortgage to the property. You may do an inspection on the property. There's land transfer tax. So land transfer tax it's built into this 1.5%, but land transfer tax is 1% of the purchase price. So if you bought a $200,000 house, $2,000 will be paid at closing to the government for land transfer tax. You also are going to prepay your property taxes for the remainder of that year. So 1.5 to 2% of the total purchase price should cover your closing costs on a property as well. So keep that in mind. And I mean, when I'm going through a pre-approval with you, we're going to factor that in, right? So if you have $15,000 to your name, probably a good idea to get a pre-approval for, maybe $225,000. Which would be a $12,500 down payment, and then you can use the other $2,500 for your closing costs. But yeah, that's those are all little things that we would look at during the application. I think that answers those questions. The question, considering the joint application along with spouse, if the spouse came to Canada late and has less or no credit score, will that impact the approval in a negative way? So the best approach to this would be add your spouse to the application if they have income and if they have something positive to bring to the application. If they have no credit score, no income, I mean, there's not a lot of sense in putting them on the application. If you're in Canada for a while, you have a strong credit score, you have, good employment history, good income, we will take a look at the total application, right? So the strength of the application based off of both borrowers. So if their credit score is lower, but it's because they were, later coming to Canada and you have a really strong one, that will kind of offset things. So you can still do a pre-approval application, but you just we're going to be looking at the whole application a little bit more holistically. But you want to make sure that if that's your situation, one of you has a very strong credit and good income. So I hope that answers your question. Next one is, could you provide me insight to the additional costs paid for the home purchase, like property tax, home insurance, etc.? Yeah, so when you're looking at a house, like, and I'm not sure if you guys are all familiar with like realtor.ca, but like if you go to realtor.ca, you type in St. John, it's going to pull up all the active listings in the market right now. And on those listings, they always provide the annual property tax amount. So if you're taking a look at a $250,000 property, your property taxes might be $3,000 a year, right? And I mean, that's probably pretty close to what they would be. Let me type the site out right here. Just give me 1 second. Someone had just asked for the site. Maybe I can just pop it into the chat here and it'll help you guys. And this is where you're going to see all the properties that are listed in well, really, it can show you any properties in Canada, but you can drill down specifically to St. John. But I would just say, you know, you can certainly go on here to see like how much money is going, like, you know, how much is going to cost you to get the house that you desire. And then, but just don't start reaching out to real estate agents and stuff until you actually do a pre-approval, because they're likely not going to take you all that seriously until you get a pre-approval. But sorry, back to that other question. You know, like let's say you're looking at a $250,000 house, property taxes are $3,000. What we're going to do is break that down to a monthly number. So on a monthly basis, that would be $250. So if your mortgage payment is $1,500, then you got to account for an additional $250 in property taxes to build into your monthly payments, right? So that would bring you up to $1,750. And we don't collect property taxes. They're all collected through Service New Brunswick, but you can have them take the money from your account on the same day that your mortgage payment may come out. You can also pay it on an annual basis too. So it's you know, there's many ways that you can do it. What was the other part to that question? Home insurance, etc. Yeah. So I mean, like the other, like outside of your mortgage payment, your property taxes, everything else is very similar. All the other expenses are very similar to like when you're renting, right? Like when you're renting, you're going to have an MB power bill or a St. John energy bill. So that'll be your power bill. You'll have your internet and cable costs. And then you'll also have, maybe right now you guys have renter's insurance. That will be, you know, instead of having renter's insurance, it'll be home insurance, which is slightly more expensive depending on the house, depending on the age of the person who's buying the house. You can budget for around $100 a month for home insurance as well. So I hope that answers your question. I mean, if you guys want to go through specific pre-approvals based off of your situation, send me an email to that email on the screen right now. We'll set up a meeting and we can certainly go through your scenario just to see where you stand. What is the validity of a pre-approval? When you take a pre-approval, will it affect your credit score? Validity of a pre-approval is very good. I mean, like I mentioned before, prior to, like at the start of the call, I mean, the validity of the pre-approval is directly correlated to where you're at in your home buying journey. If you come to me on a work permit and you're 18 to 24 months away from getting your PR, then there's not much validity to your pre-approval because we know that you're not able to buy a house, right? If you're on your permanent residency, you meet all the other criteria, you know, the 5% down payment, the work history, the credit history in Canada, I mean, your pre-approvals are very valid. You know, I'm going to tell you exactly how much money you can spend on a house. I'm going to give you a pre-approval letter that you can take to a local realtor and make offers on a house. And when you offer on the house and it gets accepted, you're not going to have any surprises, like your financing isn't going to fall through, because our pre-approvals are very, very accurate, which is different than you going online and filling out a mortgage calculator at one of these online banks, or, you know, with a mortgage broker or somebody who doesn't take the time to actually sit down and go through the process with you. You know, anybody can go online and fill out a mortgage calculator to try to figure out how much their purchasing power is, but that calculator isn't taking into account, you know, all of the variable factors, and they're not going to be the ones that are responsible for doing your application after you get a property under contract. You really want to make sure that your pre-approval is done properly, so when you offer on a property and get it under contract, you're not going to run into any issues getting your financing in place. Because the purpose of the pre-approval is we're pre-approving you as the client to go out and find a home. Once you find the home and you get it under contract with a real estate agent, you're going to come back to me, say, here's my signed purchase and sale agreement. I have 7 days to get my financing in place. And then I will begin the process of actually going through, well, as a bank, we've already verified you. I'll get some updated information from you. Like, we'll get an updated pay stub, make sure you're still working at the same job. And then we're going to do our due diligence on the property. And it usually takes, 3 to 5 business days for me to get the full approval in place. Because when you actually get an accepted offer on a house, there is certain conditions that you need to meet. You might have 7 days to get a financing letter from me. So you're going to want to do that as quick as possible. The other part of your question is, when you take a pre-approval, will it affect your credit score? So if you're getting a pre-approval from 5 different banks, yes, it'll negatively affect your credit score, because the more times you hit your credit bureau, then it negatively affects your score. If you're coming to me and you're doing a mortgage pre-approval, the credit systems are smart enough nowadays to realize, okay, you're looking at getting pre-approved for a home. Let's say your credit score is 650. The next month it might show 640, and then the month after that it'll probably bounce right back. As long as you're not going and getting pre-approvals at multiple places, because then you're hitting your credit more than once from different financial institutions. And getting a mortgage pre-approval is different than getting a credit card, right? Like if you go and start trying to get credit cards everywhere, so that's really going to negatively affect your score. A mortgage is a bit more sophisticated of a product, so credit bureaus look at it differently. But yeah, just limit the amount of pre-approvals that you do and you'll be fine. Can you buy a house when you're on maternity leave? You can. So just like I said earlier, like when I'm verifying your income during the pre-approval phase, I'm going to request a job letter from your employer. That job letter is going to tell me what your annual salary is or what your hourly rate is and how many hours per week you work, and I'll be able to calculate your income. When you're on maternity leave, you'll go to your HR department and you'll request a return to work letter. You'll say, I'm trying to buy a house. My mortgage guy needs a return to work letter or a job letter. It's the exact same letter. Let's say you make $50,000 a year. It's going to state, our employee is off on maternity leave. Their return to work date is August 1st, 2023. On that date, they're going to be making $50,000 a year. And then I can use $50,000 a year as your income. So I hope that answers that question. What's the difference between 5% and 20% down regarding insurance? Yeah, that's a great question. So if you're doing anything less than a 20% down payment on a house here in Canada, you're going to be subject to what they call default insurance premiums. And all that means is there's going to be an insurance premium that's added back to your mortgage. So there's 3 default insurance companies in Canada, Sage in Canada, Canada Guarantee, and CMHC. CMHC is probably the one that most of you have heard of if you've heard of these insurers before. If you're putting less than 20% down on a house, it's considered a high ratio mortgage. And it's just a riskier mortgage to the bank because it's more highly leveraged based off the value of your home. So these mortgages are insured by these crown corporations, these government insurance agencies. So they actually charge a premium to insure these mortgages. So if you default on the loan, they're going to be the ones that recover the house, resell the house, and try to recoup the money. So really, if you're putting 5% down, there's going to be a premium that's added back to your mortgage. You don't pay it out of pocket, it's added back to the loan. So for instance, if you put 5% down, the premium is 4%. If you put 10% down, the premium's 3.1%. If you put 15% down, the premium's about 2.8%. And then when you get to a 20% down payment, that premium goes away and no longer is it added back to your mortgage. And during the pre-approval process, I can certainly show you what those premiums would look like based off of the purchase of your home. 1 second here. Okay, next question. Okay. Can you buy this? Are pre-approvals only valid for New Brunswick or are they valid for any province? Pre-approvals are valid Canada-wide, right? The big thing about a pre-approval is we're looking at how much of a house price you can afford. I can do mortgages all over Canada. There's no, there's no limitation to where I can do a mortgage in Canada because RBC, the bank, we lend throughout Canada. So that's no issue. Really, the pre-approval is just if you're in St. John right now, for instance, but your plan is to move to Toronto or Vancouver or Calgary, we can still look at what your pre-approval will be and you can purchase a home there. But the thing is, like if you're here and your employment is here, then you're going to have to show, oh, I'm moving to Calgary, but my income is not going to change, right? So that's just kind of one thing to be aware of. Hopefully that answers your question. Next question is, hey Scott, based on your reading of the market trends and previous experiences, crash of 2008, etc., when do you think the bank's interest rates will come down? Great question. I'm going to preface this by saying, I don't have a crystal ball and I'm not a fortune teller. I do have my own opinions on it though. As of last week, you saw the Bank of Canada do a 25% basis point raise on the overnight rate. So they also, in that same press release, said that, we're going to ease off on raising rates for a little while and just see what these higher rates do to the economy to see if we can kind of even things out. And so my personal opinion is, I think in the next 12 months, you're going to start to see rates come down. RBC as a bank, for the last 13 months, all we saw was rate increases. Every bank across the board from last January to this January, we were just doing rate increases, trying to keep up with the market increases. As of 2 weeks ago, we just saw our first rate decrease and we saw another one this week as well. So our rates have gone down twice in the last 2 weeks. So what that tells me is we're starting to get to the peak, right? We may have actually peaked out already and rates are going to continue to come down. But it all depends on, these Bank of Canada economists and what they see long term. They're starting to think, okay, maybe we go into a recession. Maybe it's a very short, small one. Maybe we don't go into one at all. But they've risen rates so rapidly on people that you need to give these rate increases time to actually bake themselves into the economy, right? People are feeling the higher rates for sure. And I'll be honest with you, it's a lot harder to get pre-approved for a mortgage at a 5.5% interest rate than a 2% or 2.5% interest rate that we were looking at, two years ago or at the start of the pandemic. But rates are not going back to 2% anytime soon. Look what that did to our economy. The house prices got absolutely out of whack and we had to do 12 months of rapid rate increases. So what I think we're going to see is, I think we're going to see rates further decline, maybe down to the mid 4% range. And I think they're going to stay stagnant there for quite a while, right? When I say quite a while, probably a few years. So I think we're getting to the point where rates are going to level out here very shortly. So if you're a home buyer or you're a prospective home buyer, you need to be, obviously aware of what my mortgage payment's going to be, right? Because if you can afford a house at these rates, maybe you end up taking a 2 or 3 year fixed rate, and 2 to 3 years from now, when that rate is up for renewal, what happens is you lock in a new interest rate based on what the rates are at that time. If you could afford it at 5 or 4.5%, you're only going to see further affordability when you renew at a lower rate. The opposite can be said as well, but that's just my opinion. That question was put into chat there. So I think we're seeing a leveling off of rates. In order for people to get pre-approved to purchase a house right now, it takes a fair amount of income, right? You can't have a part-time job working, 37 hours bi-weekly at $20 an hour and expect to buy much of a house, right? Because when it comes to the mortgage payment, the property taxes, everything we need to factor in, your buying power gets eaten up very quickly. You need to have, limited debt, strong income, good savings, and then we can, you know, confidently get you pre-approved for a house that you're going to want to buy, right? I mean, like you gotta, the other piece of it too, interest rates is one piece, but housing prices is another. Housing prices are, you know, they're starting to come down as well. Like we're seeing properties sit on the market longer because there's a certain amount of buyers that have been removed from purchasing homes, right? I mean, there's people that got priced out of it because rates are too high, and then there's a lot of, you know, work permit, study permit people that were buying before that aren't able to buy anymore. So it is actually making things more affordable in the long run because there's less demand out there, which once some supply comes on the market, it should really bring the prices down a little bit and make things more affordable. We're going into like a, you know, it's the 1st of February. January is always a slow time for inventory. You're going to start to see more and more houses come on the market. If you're on a PR and you're hoping to buy in the next 6 months, I mean, you should be reaching out to me now so we can do a pre-approval and figure out what your purchasing power is. And then from there, you can kind of keep your eye on the market and see what's available to purchase in the coming months, because you're going to start to see a lot more houses come on the market. I do see a hand there. It looks like we're out of chat questions. I see a hand here. So maybe we could take that question, and then if there's nothing else, we can kind of get close to wrapping up.
Andrew,
Yeah,
yeah.
Scott.
Hi.
Yeah, thank you for your very brilliant presentation, and it's been quite engaging. My question will center on if the deposit is coming from a foreign account. Do you guys have any issue with that? If my down payment is coming from a foreign account, or we just need to keep it there for 90 days, as you mentioned? That's one. Two, you will also agree with me that you mentioned that competition has been quite high, and that's because the market is responding to demand and supply. So it looks very much like there are more people who are willing to buy than the inventory available in the market right now. So, which is the reason for that is not far-fetched. New Brunswick and especially St. John has been getting a lot of inflow from people, even intra-Canada and inter-Canada. So that is going to continue with what I've seen and the available data that has been provided. Are you aware? My question is, are you aware of anything the city is doing or to increase the inventory? Or maybe is there anything from the business environment that guarantees that the inventory will increase to respond to the number of demand that is coming up? Thank you.
Yeah, thanks for the questions. To answer the first question, if your down payment is in a foreign account, then you need to be able to show me that that foreign account belongs to you.
Scott, you're speaking on mute.
Okay, that might be a bit better there. Can you hear me?
Yep.
Okay, perfect. Yeah, so sorry. First part of your question, if your down payment is in a foreign account, absolutely we can use it. We need to see that the money has been in your name for 90 days still. So you'll have to provide me a statement from that foreign bank in your name for the last 90 days, and then a recent statement showing that that balance is still available to you. So that's question number one. Question number two, yeah, I mean, that's really the big question that people are asking themselves right now. And I can only give you my thoughts on it. The only way for us to increase supply is for us to, you know, build a bunch of houses, right? And because we don't really know when people are going to be listing their homes to sell, like previous inventory. Generally speaking, the spring market, it's a busier cycle. People are kind of, you know, they get out of that winter groove and they decide, okay, now's the time to move. We want to shake things up and get into a new house by the end of the summer or something. So we always see a flood of inventory come on the market in spring, simply due to how cyclical the real estate industry is. above and beyond that, I mean, we are like RBC directly. I mean, we do everything we can to work with builders to make sure that they have availability to build new inventory. There's certainly a lot of development going along within St. John, you know, and surrounding areas, whether that's Ross, Aquispan, you know, Hampton, Grand Bay. It's just a matter of how quickly can they build the houses, right? I don't think that they can build houses quick enough to keep up with all the demand that is here, because you're right, New Brunswick is a cheap place to live compared to other parts of the country. So more people will look here the longer that we're in this tightening phase of really, really high rates, because they may not be able to afford a home elsewhere. What I can tell you though is, you know, I have been a mortgage specialist for, you know, 3-4 years with RBC. And I mean, prior to the pandemic and during the pandemic. And during the pandemic, my phone was ringing off the hook from, you know, buyers from Ontario wanting to buy property in New Brunswick, sight unseen. They've never been here. You know, they're going to buy a property, uproot their lives and move here. I'm getting none of those calls today. So that portion of the buyers and those portions of the market, they're starting to think differently because it's more expensive to buy. So I think you'll probably see some of those people list their houses and go back to Ontario, or maybe they still own their house in Ontario and they'll go back there. So that'll be some inventory that you may see. But the actual Ontario buyers from other provinces, it's slowed down significantly, right? And now that they put the foreign buyer ban in and you can't purchase on a work permit, you need to be on, you know, you need to be a permanent resident. That took a lot of buyers out of the market as well. I did a lot of mortgages in the last couple of years for people on work permits that are, you know, working for large companies here in St. John or anywhere else in Canada, and they're very qualified buyers. And it's unfortunate that they can't still buy, because a lot of them came here to go to UNB, they got their MBA, they upgraded their education, they did everything that they should do. They're tax paying citizens. And it's unfortunate that they can't buy anymore, but by the government removing those buyers, it's going to give, you know, people on their PRs and other citizens more of a chance to buy, because there'll be less demand. So I hope that answers your question. This is going to be the last one, guys, because we're getting to the hour mark here. But I did just see a question. Hey, Scott, interest rate fluctuations in the market affected the monthly payments anytime. Okay. Interest rate fluctuations certainly will affect your mortgage payment if you don't take a fixed rate. Like when you're looking at a mortgage, there's two kinds of rates you can take. You can take a variable rate that moves with the market rate. So it'll increase or decrease when the Bank of Canada changes their overnight rates. And then there's a fixed rate option where if you sign up for a mortgage and you take a 2 or 3 year fixed rate of, you know, 5%, your rate is going to be 5% for the next 3 years. You know exactly what your monthly payment is going to be. That will not change on you during that term. As far as your pre-approvals go, you know, if you get a pre-approval, rates are at 5%, and that pre-approval expires and you come back to me to update your pre-approval, but rates went up to 5.5%, yes, that may change your pre-approval amount because your payment has gotten a little bit more expensive. But like I said, I think we're past that. I think we're going to start to see rates go down and then become stagnant for a little while. So that's, but yeah, generally speaking, if rates do increase and your pre-approval expires and you're looking to get pre-approved, you could see a slight decrease in your pre-approval amount. So I think I'll just do a last call. If there's any other questions, I got another minute here. I could answer one quickly. If not, take down my information, you know, give me a call. Things that are, you know, the market is about to heat up and get a little busier. I mean, if you have specific questions, if you have, you know, ideas that you want to bounce off of me, whatever it may be, you know, I'm an email or a phone call away. be happy to help you guys out and get you pre-approved to figure out, you know, what your purchasing power is, because we are going to see some inventory start to come on the market. I mean, it can't get much slower than it is right now. So I think in the next couple weeks, you're really going to see things turn around here.
Appreciate that, Scott. Thank you. Have a good day.
Okay, you guys take care.
Thanks everyone for joining today.
Yes, thank you. Bye.
Bye now.